aren't just going to come out of nowhere and hit you. But you've mentioned a couple that I think, would be helpful to understand. So the temporary one that is kind of in play right now that everybody is talking about is the employee retention tax credit that was in the 2020 CARES Act. So is this apply to all businesses? Are there, can you give us some more details of if we should be concerned about this?
So every business should be concerned about it. Not every business is going to qualify. And,
Okay.
and when I'm saying every business should be concerned, because everybody's circumstances are unique when it came to how did COVID affect them and how did the
Mhm.
pandemic affect them. I can go on my soapbox a little bit, and I probably won't spend a lot of time on this, but there are people out there saying everybody qualifies, which is not true.
Right.
So be wary if you feel like you had something, if somebody's promising you millions of dollars in credits and you're wondering where the heck is this coming from. But if you meet one of two requirements that were defined in the CARES Act, and like you said, we're going to nerd out on taxes again for a second, tax codes. It was defined in the CARES Act. It was redefined in the Consolidated Appropriation Act, and then redefined in the American Rescue Plan. Three major tax acts that happened from 2020, over a year time, really. It was a 12, 13-month period. These three things happened. And what happened as COVID was continuing longer, I think, than they originally expected, they decided we better put some additional incentives out there. So the employee retention credit is a key one. A business can qualify for this if they meet one of two requirements. The first one is simple, it's math. We calculate our revenue and see if we had a significant drop in revenue in any quarter in 2020 or in 21. And this goes through the third quarter of 21 for most businesses. So it's really the last 3 quarters of 2020, the first 3 quarters of 21. Some businesses can go to the fourth quarter of 21, but let's assume that's those 6 quarters. In the year 2020, if your business had a 50%
Mhm.
drop in revenue in any quarter when we compare it to the same quarter in 2019, automatic qualification, you get to now start to quantify your credit. If you had a 20% drop in the year 21, again, compared to that same quarter in 19, automatic qualification, you qualify, let's quantify the credit. And this drop in revenue does not have to be, you do not have to prove that COVID affected you. You just have to prove that you had a drop in revenue. And so it's a really straightforward calculation. Boom, I meet the math, I qualify. But 50% drop is pretty big in 2020. And we have clients that have done it, restaurants, bars, theaters, gyms, the common users of this. But that's not the only way to qualify. You can qualify. We're going deep dive taxes to talk now. I mean, we got to laugh a little more because this is, not
No, this
everybody
is good.
enjoys
I
tax.
understand it. This is
All
good.
right. All right. So the other way to qualify, if you don't meet the math, is were you restricted, your business restricted by a government mandate, a mandate that was put in place due to COVID, due to some kind of restrictions, due to, it, and it has to affect your business. It can't just be you're in an area where there's a mandate and so you qualify. No, we have to show that your business was affected. And so the easy one to explain is, let's say restaurants. Restaurants around the country, almost everywhere, were closed for a certain amount of time. No indoor dining. They have a mandate that affected them. They qualify. Even when they went to, let's say, 50% capacity, so you can eat indoor now, that's still a mandate. It's restricting their business. They qualify. And so restaurants are the easy one. Actually, medical as well, because medical, let's say your dentist. Your dentist was able to do a root canal, but they were closed from being to do just a checkup. They couldn't do that for maybe it was 2 weeks, maybe it was 4 weeks, maybe it was 6 weeks, but there was a moment in time that they were affected. So if you didn't meet the math, the 20% drop in 21 or 50% drop in 20, and you can prove that you were affected by a government mandate that restricted your ability to conduct business, now you qualify as well. So one or the other, not both. There's some confusion on that. People think, well, I didn't have the drop in revenue, I don't qualify. But that's not true. And if you let me ramble for a couple more minutes, I can give you another good example on that. So besides having a lot of fun talking tax, I actually own a partner in a craft beer bar in Chicago as well. And we're a craft beer bar and a liquor store. So we have two entities in the same building, in the same place. In Chicago, we were under capacity restrictions in the bar from March 17th, 2020 till July or June 11th of 21. So a long period. I mean, well over a year, there was restrictions in place. The liquor store was essential. There was no restrictions in place, and obviously, liquor's essential. So it was an essential business, no restrictions. If you looked at the overall financial statements for our business, revenue overall in 2020 and in 21 was significantly up because a lot of people got drunk at home, so they would buy stuff. But so my revenue didn't drop at all. In fact, it increased significantly. But the fact that my bar revenue was under restrictions, and there's some math you can do there to determine, but the fact that a portion of my business was restricted allowed me to qualify for the credit. So that's what I was pointing out. Everybody's got a unique situation. Just because there's an increase in revenue, well, let's find out if there was a portion of your business affected. If so, you can still qualify for this.
Well, and
deep
I think,
breath. Right.
Yeah, deep breath, because I got a question about it too.
Right. Yep.
But I think that this is an important piece, is that even when, I mean, if you go back to looking at how you got the PPP loan, right? Yep. It was looking at a quarter comparison, a quarter to a quarter. So you don't always have to look at the whole, right? It's not the total of each revenue for each year. It's like, did you have a bad first, second, or third quarter of 2020 compared to 19, which was a lot of people's banner financial year, right?
Yep.
So it's not the total, but I think that that's a key. But the other thing that you said is that is to qualify. And now once you have qualified, then you have to quantify or calculate what the actual credit was. So I think that's where we're going next, right?
Yes, I think that's a good point, because if this thing's worth $1, it's not worth my time, right? So what's it? Although if you want to hand me $1 right now, I'll take it, but it's not. I'm not going to spend a lot of time on it. I'm not driving to St. Louis to pick up that $1. I'll tell you that right now. So yes. So 21, I kind of mentioned things got enhanced in the couple different tax codes. Let's go 2020 first, and then you'll see it's a significant credit, and then I'll blow your mind when we talk 21 credits. All right, so 2020, the credit was an annual credit for 2020. And annual means as soon as you were affected, or as soon as your revenue drop started, as early as March 13th, that's when this kicked in. So March 13th of 2020 is the earliest you can qualify, all the way to the end of the year. Let's assume a company qualified for the entire year. The credit is the 50% of the first $10,000 of wages per employee, eligible wages. And I say eligible because, and you mentioned, Melissa, that PPP. You can do both. You can have a PPP and ERC, but you can't use the same wages for both. So you need to segregate out those wages, which for 2020 is usually fairly easy, especially if you qualified the whole time, because $10,000, if you have full-time employees, let's assume you have $10,000 of wages per employee for a 9.5 month period. They're probably going to be well more than that, even taking out whatever you used of their wages for forgiveness. So very simply, one employee is worth $5,000 credit in the year 2020, most likely. If you have 10 employees, small business, 10 employees, there's a $50,000 credit sitting there if you haven't done this yet, and if you qualify, sitting there right now. That's just sitting there. That's an asset that you don't even know exists, that's sitting there for the asking. And I say that because this is not, we didn't even talk on this at all, but tax credits in general, if anybody knows tax credits, you think, okay, a credit I have to use to offset my income taxes, kind of like the example I used before, the $400,000 drop into $300,000. In this scenario, a tax credit is cash. It doesn't matter what taxes you paid. It doesn't matter if you're ever going to pay taxes in the future. If you say you have a $50,000 credit, you file the forms, the IRS sends you a $50,000 check. So this is money. That's exactly what this is. So that's the year 2020. Small business, 10 employees, could have a potential $50,000 refund check sitting there. And when you're talking
Mhm.
about valuation, that might be a nice asset going back into the business. So at least, small business.
That's true.
Um,
That's true.
all right. So that's the
Well,
year.
for any small business, though, you have two, three, four employees. I mean, and
Yep.
again, let's go back to the conversation that we just had. This is not a tax deduction. This
Right.
is a tax credit. So this is if you paid $5,000 in taxes, you get $5,000 back, right?
Well, you don't even have to
No?
pay taxes in this one. This
Okay.
is this is I have a credit, I get a refund check.
Awesome.
You
Okay.
refundable credits don't happen. IRS doesn't give out refundable credits. This is
Right.
one that they did. This is a very unique. You mentioned my podcast was the Unique CPA, so I try to build that into my conversation. This is a very unique credit that CPAs get to deal with, and
Hmm.
as a refund. So it honestly doesn't matter what your taxes are at all.
Hmm.
You get this check, you get this money back. So I'm sorry, I interrupted.